All right, so I'm going to go over this Euro CAD trade that I took today. So we're going to start with the daily chart and we're going to work our way down. So daily chart, what are we looking at here? Well, clearly this daily chart is bullish, operating 100% within a bullish market structure. So daily chart, bullish market structure, very, very, very bullish, right? So now let's go to the 4-hour chart. So 4-hour chart, we actually had a higher time frame level on this thing. So I'm sure some of you already see it. You see what I'm eyeing here. See this old high right here inside of the fair value gap. So you see the swing high level, highest high in the middle with two lower highs on the left and the right. That makes that a swing high, and it's nestled real nicely inside of this fair value gap imbalance. And what do we know about that? Well, if you recall, and if you've watched my support and resistance series, you'll know that whenever we have an old high like this inside of a fair value gap, many times it's a very, very sensitive price point, right? So that is a higher time frame level. Again, it's on a 4-hour chart that constitutes as a higher time frame level of support, which is always best when you have a higher time frame level of support that you see that price reaction off of, right? So that was nice to see. And let's see, 1-hour chart, you can see we cleaned out these sell stops right here. We came down, we closed in this imbalance as well. See that? See that bullish imbalance right there? Now I got my confirmation on the 15-minute chart. So you see right here, if you look, I want you to follow my cursor. So this morning, so this is where we traded down into that higher time frame level. We traded down into it, and then we had a nice move off that level, but we didn't have the confirmation just yet. There's no fair value gap in here, right here. But then we pulled back, price pulled back, took out that liquidity, took out that swing level. Boom, you get a nice move to the upside. See that fair value gap confirmation right there? I'll plot it on there so we're all following along. There's your fair value gap, your bullish fair value gap off of that higher time frame level of support. Remember, our daily chart as well. Is our daily chart 100% bullish. Trend is 100% bullish on this thing. And this was our displacement to the upside. So it came up, it took out these highs right here, cleaned out that buy side liquidity, and then pulled back. It pulled back into that imbalance. Okay, that was where I entered. Once we closed in that imbalance, we traded down into a discount marketplace, right? And so my stop on this thing was right here. So right underneath of this low. And why did I decide to go with this low instead of this low? Because you might be thinking, well, isn't that the low of that fair value gap right there? I thought you keep your stop below the fair value gap. So why are you keeping your stop right here? Well, you got to consider, as I said, I believe in my previous review, the best place to keep your stop. I like using the fair value gap. I absolutely do. But we also got to consider where the major liquidity grab was. Was this a major liquidity grab right here? It grabbed these lows, and sure, that's sell side liquidity, but it's not a major liquidity pull, right? This grabbed previous day's lows. So this grabbed previous day's lows. That is a much more significant liquidity pull than this. Or this just grabbed that previous 15-minute swing point. That it's liquidity, but it's not a significant liquidity pull like we had over here where it grabbed these lows. That is way more significant than this. So that was the reason why I went with that, give it more wiggle room. And when you know, it ended up didn't give that follow through, came down and ended up getting tagged out right here once it tagged that low, right? So what can we learn from this? Well, was the play bad? Nope, it wasn't a bad play. It wasn't a bad setup. Consider everything that I told you thus far, the fact that we are trading with a higher time frame trend, the fact that we have a higher time frame level, the fact that we had that displacement to the upside, the fact that it did trade down into a discount, within a kill zone. I mean, it had everything I wanted on the play. It just could not do it. Now, this is worth noting, and I really need to, it's something to consider going forward. The vast majority of my L's that I take are on Mondays. I've realized that. The vast majority of my L's, they are indeed on Mondays. Mondays, they do me dirty more times than not. So it may be something that I need to consider going forward. Maybe take off Mondays and just trade Tuesdays, Wednesdays, Thursdays, and Fridays. Because, I mean, the data doesn't lie. The data is telling me that Mondays are complete crap for my strategy, that is. So that's something worth noting. But overall, I'm still pleased with how I traded. I followed the plan. All right, I kept my discipline. I stopped out where I said I was going to stop out at, and that's that.